Welcome to Reverse Mortgage and Beyond, the podcast where we take you inside the world of reverse mortgages. I'm Cheryl Scheidell, and I have been in the mortgage industry since 2002 and have specialized in reverse mortgages for the past 10 years. We'll cover topics like reverse mortgage basics, purchasing a home, and the myths about reverse. You'll also hear from some trusted referral partners. Let's get started. Hello, everyone. Welcome back to Reverse Mortgage and Beyond. I'm your host, Cheryl Scheidell with Barrett Financial. And thanks for coming back. Today, I'm going to tell you a little bit more about myself, and then we're going to go into the myths about reverse mortgages, as well as how to purchase a home with a reverse mortgage and that second lien position reverse mortgage that a lot of people don't know about. So anyway, I just want to share a little bit about myself. I'm from Arizona. I'm a Phoenician. And one thing I neglected to say in my last couple of podcasts is that Barrett Financial is actually licensed in all states except for New York. And so I can help you around the US. I have people saying, hey, my family's in Michigan. Can you help me out? Hey, I got someone in Florida. Can you help me out? So depending on the case, I'll just get licensed there. And so I'm licensed personally in Oregon, California, Nevada, Arizona, and Texas. So I've got Colorado coming up and possibly Florida. But I can help you in other states. So just a heads up there. My background's hotel and restaurant management. I went to Moon Valley High School, NAU. My last position was at the Scottsdale Princess. Some things that people don't know about me is I've been very fortunate, and I've been to all 50 states, including some countries around the world, but I've been to all 50 states before I was 50. So I'm pretty excited that that was an adventure I didn't even know was happening. And when I started looking at the map of the US, I'm like, wow, there's only 3 states I haven't been to, and that was right before I was 50, and I ended up hitting those. So it was nice. It was Indiana, Ohio, and South Dakota, or actually North Dakota. So anyway, just a little bit about me, as well as with 3 other young ladies here in the Valley. We started an Arizona women's group called Arizona Women of Impact. Would love for you to join us. We have a Facebook group. Feel free to come in. And then I also work with a charity organization called Valley Life, which helps adults with disabilities. So I've been their gala chair before, and then been working with them for the last 8 years. So just a little bit about myself. And then I used to have 3 dogs. I used to have a Great Dane, a Dalmatian, and a Basenji. They all got into their older years. My Basenji made it to 17, so I was pretty proud of that. But so now, because I don't have dogs right now currently, I always get my dog fixed by dog sitting, so it's been nice. That's how I get my fur baby fixed. But anyway, enough about me. I just want to talk to you. I just completed a podcast on reverse basics. So you want to get the basics on reverse. Basically, we're helping our seniors who are 62 years and older tap into the equity of their home, so that way they can use that for in-home health care. They can get a new roof. They can get, maybe they have a 2-story house and they need one of those escalator chairs that take them up because they can't move, but they need to be able to get up the stairs. So they get one of those. I actually met one of those gentlemen a couple weeks ago, but they've got those chair lifts that take them up the stairs, so that way they don't have to walk the stairs. So there's just, you can do home improvements. I had a lady here in Paradise Valley. She was remodeling her casita. She had a free and clear home, about $1 million, and she was 62 years of age, and she's like, I'm remodeling my casita. I'm like, you go, girl. So anyway, there's all these different things you can do with this. This is considered tax-free money, so you don't pay income tax on this because it's borrowed money. It's based off of the age of the youngest spouse in the household. So someone who is 82 is going to be able to access more money in their home than someone who's 62. But we can still do it at 62 because some people have a lot of equity in their home. This loan is going to have a low loan to value. So you're not going to get a loan to value. I had a gentleman call me from the radio show. I have a radio show. It's on Sundays at 3:30 on AM 960 called Is a Reverse Mortgage Right for You? And I've had different referral partners on in the past, as well as I talk about reverse basics. As a matter of fact, I'm getting ready to interview Rita Davenport this week. So you'll have to go in and listen to that episode. It'll be on Spotify also. But I had a gentleman call me from the radio show, and he wanted to get 80% out of his house. So the only way he could get 80% out of his house is if he did a traditional loan, like a 30-year fix, and have a monthly mortgage payment. With the reverse mortgage, depending on your age, we do it off the value of the house and the age of the youngest borrower. The computer calculates a loan amount. Now, that loan amount is going to be anywhere between 37% to 43%. We used to be closer to the 50% loan to value, but with market volatility, the investors kind of, tightened up the purse strings. And so now the loan to values are a little lower. So if family members that actually was just referred somebody from my title company, her mom, she's late 80s, and they're just trying to get rid of their monthly mortgage payment because that's cash flow. Now she won't have to they're getting rid of the monthly mortgage payment. The reverse mortgage pays off her existing loan. And then now she doesn't have a monthly mortgage payment. I think it was like $1,200 a month. So that's $1,200 a month cash flow for her. So I also just had a referral, just like telling some of these stories. I also just had a referral. She's 85 years old. Her house is free and clear. And she just wanted to tap into that money so she had it because she didn't want to have to borrow money from the adult kids on a monthly basis. So she's tapping into her house to use that money to make ends meet. I also had another lady call from the radio show, 85 years old, and she's like, I want to pay off my loan. She had a condo. We had to do some special stuff, did some special questionnaires to get the condo approved, but she wants to travel. So she's actually on a cruise right now, traveling after she got the reverse mortgage done. So the reverse mortgage, you can use the money however you want. Think about it this way. You're living in your piggy bank. You're in your castle of your home. You're living in your piggy bank. Why not tap into that piggy bank, crack it open, get the money out, use it, new roof, age in place, take the grandkids on memorable vacations now while you're still here, instead of when you're gone and then they're saying, oh, remember grandma? Take them out now and build those memories with them. I just think that's so important. That's what my family has done. We've gone to trips to New York. We've gone to Hawaii together. We've gone to Alaska together. And my mom's building memories with the grandkids. And so that being said, I had 3 reverse mortgages fall into my lap. So I've been doing these for 10 years. I've been in the business since 2002, so 20 plus years, but I've been doing reverse mortgages for 10 years. And about 5 years ago, my mom would hear me talking on the phone to somebody, all these different stories, how it works. She says to me, I think I need to do this. So my mom actually has a reverse mortgage that I believe in it so much. And she just loves it. So her mortgage payment was smaller because she had just she had sold her original primary, moved into one of her rental properties, a little duplex. She had a little under $1,000 payment. Now she takes that money and she donates it to a lot of different charities that she likes. So you can do whatever you want with that money. So anyway, let's see. What else do I want to say? So yeah, so we've got a lot of different stories. I had a lady come to me from a referral. She was actually hit by a city truck and she's going through a lawsuit right now. We ran the numbers for her reverse mortgage, and she, in order to make the reverse mortgage work, she was going to have to come in with $25,000. Well, she doesn't have $25,000 to come in with, but she has this lawsuit going on with, that she's going to get a payout. And I said to her, I'm not going to tell you what to do. I said, but don't dump all that money into the house to pay off your loan, the $200,000 that you owe. Then you're going to be house rich and cash poor. Just pay the $25,000 that we need to make the reverse mortgage work. You won't have a monthly mortgage payment, and then you can invest that money. And she's like, I never thought about that. I said, well, I'm not telling you what to do. I want you to talk to your CPA. I want you to talk to your financial advisor. But this could be a way to get rid of that $1,200 monthly mortgage payment. And all you have to come up with is $25,000. And then you can invest the rest of that. And so, there's so many different scenarios, and I like to think outside the box. So I would love to hear from you. You can actually reach me at 480-817-4324. And you can call me with your scenarios, and I'll be happy to go over that and think outside the box with you. But what we're going to do today is we're going to talk about the myths about reverse mortgages. And then I'll tell some stories as we go along the way too. So reverse mortgage sells the home to the bank. That's a myth. You still own your home. The bank does not own your home. The bank doesn't want to own your home. The bank just wants to make the interest. That's all they want to do. They want to make the interest. So what happens is you still own the home, whether it's in your name or in the name of your trust. So you can close in your trust. Some programs you can't do that, but you can close in your trust with this. Now, I had a lovely couple. It wasn't a couple. It was a mom and a son. And I was talking to them. She was still working as a nurse. And the son looked at me and he said, "Can I make the payment every month?" And I'm like, "Absolutely. The bank will always take your money." So this is what his thought process was. Every month, you're going to get a statement in the mail. It'll say this is not a bill because you're not required to make a monthly mortgage payment. He looked at his mom and he's like, "Mom, love you dearly, but when you no longer live here or you pass away, I'm going to refinance this house and I'm going to rent it out." So by what he was wanting to do was make the monthly interest payment. That keeps the loan balance down. So when he goes to refinance, he has a low loan balance. So maybe he'll be at 50% loan to value. So then his rate's going to be better. His loan amount's going to be lower. The value of the house has gone up. So he's just forward thinking. I'm like, good for you. So just different ways to use your house as a wealth building tool. People in the past used to always think that this is a last resort. It's not a last resort. You can use your house as a tool to help you get through your retirement years. 14 plus $1 trillion in home equity out there right now. And this loan is good until you are 150 years old. So I think we're going to be okay, right? So with the reverse mortgage, the title has a lien. So the bank has a lien on the property, just like it does on a 30-year fix. So the bank has a lien on the property. When you go to sell the home, when you go to refinance a home, then that's when, something has to happen. And that's when the bank gets paid off and they get their money, title, all the stuff happens, just like a regular transaction. So just keep that in mind. The next one, the homeowner could get forced out of the home. So that was in the past. That was one of the reasons why we had a negative connotation. This is what happens. In the past, you could have an older spouse and then you'd have a younger spouse. Well, with this loan, the older you are, the more access to the money you get, right? Well, when people were married, they weren't putting the second spouse on the loan because they were younger, right? So they would do it on the older spouse. But then when the older spouse passed away, maybe the younger spouse didn't qualify to do that loan. And so what happened was they were forced out of their home. So they put a new guideline into place that if you're married, you both have to be on the loan. And then we go off the value or the principal limit, which is the loan amount, is actually calculated on the lower of the two. So of the ages. So it's based off the home value, the youngest borrower in the household, and the interest rate. And that's how we come up with what's called a principal limit, which is your loan amount. Now, there have been a couple cases where, maybe 5 over my years, that the numbers didn't work out to where they had to pay off the bank because they had to come in with more money. So hypothetically, well, not even really hypothetically, here's an example. I had a lady, she had come to me. I'd done a couple 30-year fixed cash out refis for her. Her husband was going through some medical issues. He did pass away. And then she was at a point of making a decision. Do I stay in my home with all my memories? Do I move out and buy a home with a reverse mortgage? To do her loan, she was short $50,000. She only qualified for $270,000, but she owed Chase Bank $320,000. That's $50,000 difference. We got to pay off Chase Bank. You can't do a reverse without paying off your current lender. So we talked to the financial advisor, and he was able to make her money. If she came out with that $50,000, he was able to make her money last for her. So there's an example of the numbers didn't quite work out because the value wasn't quite where we needed to be. She was on the younger side, but we were still able to make the loan work. Now, here's another example. I had somebody who was doing a loan. It was in the month of November. She was going to have to come in with $9,000 to pay off her existing loan to call it even. She didn't have $9,000. So what we did was we waited till January. And in January, she aged up into the next age group that she was. Her home value went up. Her loan balance went down. And it was a perfect storm because when we reran the numbers and did the appraisal, she only had to come in with $1,200. I keep saying $1,200 because $1,200 seems to be that magic number, but she only had to come in with $1,200, which was like her mortgage payment. She made one last mortgage payment, and then she doesn't have to make a mortgage payment until she passes away in her house or moves out. So there's just different ways of doing this loan. You can't be forced out unless you're not paying your property taxes and your homeowner's insurance, and we get you in a tax lien situation. So you will be responsible for that. If you can't do that on your own, then we have a product called, it's not a product, it's an account called a LISA, a life expectancy set aside. So we're going to calculate your monthly property taxes, your homeowner's insurance on a monthly basis. We're going to see how long we think you're going to live to be, and then we're going to create that account out of the equity of your home, and we're going to make those payments for you. I had a veteran who was in, he was on the auction block. His house was going back to the bank. He had 10 days. We found an investor and they paid off the bank. He got his chunk of money. We took that money and we purchased a home with the reverse mortgage, which I'll get into here in a minute. And we set up that LISA, that life expectancy set aside, because he had gotten into some challenges, but we were able to still do the loan for him because we do a financial assessment. We don't go off of credit scores. We just make sure you've been paying your property taxes and homeowners insurance on time. But we had to do that account because he was in that foreclosure type of situation, even though he didn't go into it. And so he got into a new home, but he doesn't have to pay his property taxes or homeowners insurance because we have that account set up. So just something to keep in mind. Social Security and Medicare will not be affected as long as, whatever the guidelines are, you just want to make sure that you're not pulling out more than we don't want you to disqualify yourself. So this is an asset. So just make sure you're pulling out the amounts. Talk to your person on how that product works for you. The homeowner pays taxes. The proceeds are considered borrowed money. So you do not pay income taxes on this loan. A reverse mortgage is similar to a home equity loan. It's not. A home equity loan, you are paying monthly payments and it's for 5 to 10 years. And then that home equity loan is going to go most likely from an interest-only payment to an amortization payment. And sometimes people can't even afford that when it goes from $300 to $600 or $700 a month. So just keep that in mind. This one, you don't have to make a mortgage payment and it can never be frozen. So back in 2008, we had a lot of accounts frozen. This can't be frozen. This is your money. It's not used as a last resort. We've already talked about that. So this is just a little chart about the requirements, no monthly mortgage payments, it's optional, all the stuff we've been talking about. Now, what I want to get into is the advantages of a HECM for purchase. So HECM means home equity conversion mortgage. It's intertwined with reverse mortgage. We're trying to get away from that negative connotation. So that's how we came up with that name. So to purchase a home, you have to think a little bit backwards. Because when you have your current home, we're going to have a low loan to value. It's going to be 37 to 43% depending on your age, right? With a reverse purchase, you're not going to be doing 5, 10, 15, 20% down. It's going to be more like 65% down because you're funding the equity into the home so you don't have to make a mortgage payment. So someone who's older, like 82, is not going to have to put down as much money as someone who's 62. So just get your head wrapped around that. down payment's going to be larger. So we have people that sell a home and then they dump the net proceeds into their new home so they don't have to make a mortgage payment. I had a lady come to me from a financial advisor. She was 66 years old and she said to me, I want a 30-year fix. And I said, okay. So I showed her the numbers for the 30-year fix. I showed her the numbers for the 5/1 ARM. And then I said, let me show you the reverse purchase. She said, I don't want that. And I said, okay, that's fine, but let me educate you so that way next year you don't say to me, why didn't you tell me about that? And so she's like, all right. The next day she calls me up and she's like, I want to do that. And I said, okay, what changed? And she said, well, if I get the reverse mortgage, I don't have to make a monthly mortgage payment, correct? And I said, no. And she said, all right. So what happens is I'm going to get the reverse purchase, not have a monthly mortgage payment, but that $2,000 a month that I would have paid my 30-year fixed mortgage payment, I'm going to take that $2,000 and give it to my financial advisor to invest for me. And I'm like, oh my gosh, good for you. So she's just thinking of how she can use her house as a wealth building tool. Now that was 9 years ago. And I just spoke to her the other day because she's got a, what does she have? An estate planning sales business. So I had someone I was referring to her and she's still loving her reverse mortgage. And so anyway, just something to think about. There's no FICO requirements because we go off a 2-year look back to make sure you even pay your property taxes and your homeowner's insurance on time. There's no employment requirements, no monthly mortgage payments. We talked about that. You can't outlive this. It's good till you're 150 years old. And this helps you preserve the assets for your retirement. Now think about this. Champagne taste, beer budget, right? The reverse mortgage can help you get into the neighborhood you want to by supplementing your money. So I can't believe I'm saying this in Arizona, but let's say you want to get a $500,000 house or a $700,000 house, but you don't have enough cash left over from the sale of your existing home. So you're like, I got to look in the $500,000 range, but what I really want's in the $650,000 range. Well, with the reverse purchase, based off of your age, maybe your net proceeds of that $500,000, you're using just a portion of that to buy this $650,000 house, and then you're going to have some money left over that you can give to your financial advisor. So that's why financial advisors love us, because we're helping them out too. On the contrary, let's say you want to get a house and you're going to buy something for $700,000. You're going to live with the grandkids, help the kids out, babysit all the stuff, and have a multi-generational home. And you go to your financial advisor and you're like, hey, I need $200,000 to get this house. He's going to go talk to Cheryl because we're not giving you that money. We can help you supplement that money to that with the reverse loan to buy that $700,000 house. These are just examples. Don't go off my numbers. These are examples. You know, it's based off of age, the value, all the stuff, the interest rate. But this is just an example. This can be supplement you to get you into the neighborhood and the house that you want by doing the reverse purchase. The other thing about reverse purchases, you can actually add a line of credit onto that. You can't do that on 30-year fix. So I had a lady, I told her about this feature, and she was purchasing her home with a reverse purchase. She had an extra $50,000 left over, and she wanted to take $25,000 of that and do a line of credit. So we funded a line of credit onto her house. It's growing for her, it has a growth rate. But if the air conditioning goes out, if she needs a new roof, she can tap in and let the house pay for the house. And then she still kept some in for, a little savings account. So you can actually have a line of credit with the reverse purchase. So this reverse purchase allows you more purchasing power. It helps borrowers buy a higher price point to overcome, the standard of living we have, asset retention, and then we talked about the line of credit. Now, we didn't have this in the past. Now we do. You can actually do seller contributions up to 6%. We did not have that before. So that's pretty exciting that we can have seller contributions. From time to time, we didn't talk about this last time, but from time to time, there might be a second appraisal because there's neighborhoods out there like Arcadia, different areas around that you could have an $800,000 house or $1 million house next to a $400,000 or $600,000 house. So you do the first appraisal. We have to put it through a system. Sometimes it kicks out, oh, we need to have a second opinion. So from time to time that'll happen, and we pay for the second appraisal, so you don't have to worry about that as the lender. Let's see here. So reason households choose to move: wanting to get closer to family is 29%, wanting to reduce home expenses, 26%, and then change in marital status. Silver tsunami is coming up, but we also have a lot of silver divorces coming up, unfortunately. I just helped a lady. She was getting divorced at 81. It was her second marriage. Didn't happen, didn't work out, but she did a reverse mortgage on her current home to buy him out. So she got the equity out of the home to pay him off in the divorce, and then he purchased a home with those funds. So silver divorces do happen. I can help those people. Feel free to let me know if you know of any attorneys I can help you with, financial advisors I'd love to meet. But silver tsunami is coming, and we need to be ready for this. Let's see. Percentage of retirees who have moved or anticipate moving in retirement. So 36% do not anticipate moving in retirement. 27%, let's see, have not yet moved but anticipate moving, and then 37% have moved in retirement. So there's a lot of moving going on. Retirees' most recent move was into, what is they're doing? They are downsizing. 51% smaller home, downsizing. 19% same size home, 30% larger home. So that's what's going on out there. So anyway, this is just an example. What I have a little slide here that I want to show everybody. These are some of my clients that I love to show. So I'll just end off with this story. I spoke at an event for Wine Women and Wealth, and I had a lady, I only spoke for about 15 minutes, and I had a lady come up to me. She's like, you need to do this for my mom. And I'm like, okay, let's go talk to your mom. So we go and talk to her mom. Her mom was 73. She was doing hair as a hairdresser at an assisted living home 2 or 3 days a week. She wanted to retire. She didn't want to be doing hair every day, a couple times a week to make her mortgage payment. So we start her mortgage to do the reverse mortgage. I had to get some information from her CPA. CPA sent the paperwork over. Everything was blacked out that we needed. I'm like, so I called the CPA with the client. I'm like, we need this information. She felt comfortable with me. And then she said to me, I didn't know we could do this. I want to do this. So the CPA ended up doing her loan. CPA is like, you need to talk to my sister-in-law. So I ended up doing her sister-in-law's loan right here, Miss Bernie. Then Bernie's like, you need to do this for my sister. So Miss Cora up there in the top left corner, I got to her house in a little manufactured home over by Desert Ridge, and she was laid out on her lazy boy. She did not sit up for me. I go to give her a hug and I say, Cora, do you know why I'm here? She says, you're here to sell me something. I said, no, I'm here to educate you. By the time we were done, she was sitting at the kitchen table with me, giving me a hug goodbye. And I'm walking out the door, and the daughter says to me, oh my gosh, I've never seen a transformation like that. Cora has since passed. I was on the front row of the funeral with the family, and the daughter has since refinanced the home and moved into the home with a reverse mortgage. Since then, now this is all over the last 10 years. And since then, I met her daughter, and then I've helped them out with dog sitting jobs and referrals and all that kind of stuff. But once people get and understand the reverse mortgage and how it could just free their mind and give them peace of mind, financial security, I have people come to me and they're like, I want to leave this to the kids. And the kids are like, no, you're borrowing money from us now. We need you to take the money out of the house. But I do need to talk really quick before I wrap up. There is a second mortgage out there. For a lot of you that have those low loan interest rates for your 30-year fix, those really low interest rates we're talking about, we can actually put a second reverse mortgage behind that. No monthly mortgage payment. So here's an example. I had somebody come to me. He had a first and a second loan already in place. We were going to pay off his second mortgage It was about $90,000. And then he wouldn't have a mortgage payment, but then he also had a line of credit for $80,000. So we got rid of his $700 second mortgage payment, and he had a line of credit for like $80,000. So there's a product out there that if you want to tap into the equity of your home, you got to have a lot of equity in your home, but keep that 30-year fix in place. We can do a second lien position for reverse mortgage and no monthly mortgage payments. So anyway, that's what I got for today. I appreciate you joining. Make sure you subscribe so that way you can see all the other podcasts that are coming out. I can be reached at 480-817-4324. I also have a website called reversemortgageandbeyond.com. And I look forward to seeing you soon. Thank you so much. Again, this is Cheryl Scheidell, NMLS number 886425 with Barrett Financial, an equal housing lender. Please remember that loan programs, rates, and eligibility guidelines are subject to change and may vary based on individual circumstances. Nothing discussed in this episode constitute a loan offer or credit decision. Any examples or scenarios shared are strictly for illustrative purposes. All loans are subject to credit approval and underwriting conditions.